This is a video I've been waiting to make. Everyone talks about the XRP flip the switch moment like it's some mystical event in the background. But the truth is, the switch is real, it's logical, it's structural, and it has two parts: the bank charter and the Fed master account. When Ripple becomes a bank, everything they've been building quietly comes online. Right now, Ripple operates like a fintech with global reach. But once the OCC approves a national trust bank charter, Ripple becomes a regulated financial institution inside the US banking system. That means they can custody assets, they can clear settlements, they can connect directly with banks, they can hold treasuries, they can issue, store, and move RLUSD, and they can provide liquidity on demand, all within a regulated, recognized framework. The charter doesn't just give them a title, it gives them authority to do the things Ripple already built infrastructure for. Then comes the second piece, the Fed master account. A master account is access to the core of the US financial system: real-time gross settlement, wire, ACH, and direct clearing. If Ripple receives a charter and a master account, their liquidity hub isn't just a product, it becomes a banking rail. Ripple becomes a settlement gateway. XRP becomes the bridge asset inside the system. That's the moment where the rails they've built actually plug into the real economy. This is where the supply shock comes in. ETFs and corporate treasuries aren't random hype. They are the liquidity and demand layer that makes utility possible. When financial institutions buy XRP for treasury reserves, liquidity pools, on-demand settlement, hedging exposure, or ETF inflows, they aren't trading a meme. They're stocking a bridge asset. This creates the liquidity Ripple needs to operate globally at scale. So here's the actual order of operations for XRP's utility moment. Step number 1, liquidity is going to enter the ecosystem. ETFs, institutional reserves, company treasuries, RLUSD growth, all of these are going to impact XRP's liquidity. Step number 2, Ripple's going to receive a bank charter, and they'll become a regulated settlement institution. Step number 3, Ripple gains the Fed master account. Now they have access to the Fed level settlement rails. Step number 4, the infrastructure goes live. XRP gets used as the bridge, liquidity routing turns on, banks can tap into it on demand, and global corridors open. This is the real switch, not some global background price. It's structural activation. Over the last 2 years, Ripple has quietly assembled the entire stack: G-Treasury for cash management, Hidden Road for prime brokerage and liquidity, Metaco and standard custody for institutional custody, Rail and Palisade for FX and payments infrastructure, RLUSD for settlement stablecoin. And now they're waiting on one thing: US approval to run the system domestically. The rest of the world is already aligning. South America, Africa, Asia, Europe, everyone is on board. The US is the final unlock. So when people say that XRP will never move, they're missing the macro picture. The system isn't waiting on the price. The system is waiting on the structure. Once Ripple becomes a bank, once the master account is approved, and once institutions start holding XRP for settlement liquidity, that's when the rails go from ready to active. And the moment that happens, the price will follow the utility, not the hype.